Hello and good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Outlook. Starting as usual with a brief coverage of the main markets. North American markets first. The Dow and the Nasdaq went up 25 points for the Dow, 65 for the Nasdaq. The Dixie index is up to 97.14. Yesterday, ISM non-manufacturing PMI as expected. Markit Services PMI 0.6 better than expected. Markit PMI Composite 0.7 points better than expected. Labor market conditions 3.7 points worse than expected, and 3 and 6 month bill auctions 0.015% lower than previous, and the other reading lower than previous as well. In Canada, IV Purchasing Managers Index 5.2 worse than expected. Bank of Canada Business Outlook survey yesterday, lower oil prices and weaker currency support business outlook, and the majority anticipate a positive impact for the strong US economic growth. Firms indicate that labor shortages are less intense than they were a year ago. Inflation expectations also remain low for the next 12 months. We have the FOMC minutes coming out tomorrow. Moving along to the European markets. Yesterday, both DAX and CAC 40 went up, 110 points for the German index, 40 points for the French. No major events yesterday from the calendar and for the week ahead, but just a few. Today, we have Markit Services PMI for Germany and the EU area, along with the PPI year-on-year and month-on-month. Retail sales tomorrow, some Tier 2 and Tier 3 events for Germany, unemployment rate for Switzerland on Friday. The biggest mover yesterday was the euro versus the Australian dollar, 210 pips up. Moving along to the British markets, starting with the FTSE 100, which gained 72 points yesterday and closed at 6,000, almost 6,800 points. The biggest movers were versus the New Zealand and the Aussie dollars, with over 100 pips each already. On Thursday, we're waiting for the Bank of England Interest Rate Decision and also Asset Purchase Facility reports. On Friday, the NIESR GDP Estimate. Moving along to the Asian Pacific markets, the Nikkei has gained another 46 points over the last two sessions after the Federal Reserve official said interest rates would likely stay accommodative for a longer period, boosting US equities. The Nikkei 225 stock average added 1.3% to 19,656. The yen traded at 119.62 per dollar after losing 0.5% on Monday. The Royal Bank of Australia interest rate decision came out yesterday, remained unchanged at 2.25%. Also, rate statement, Mr. Glenn Stevens said that moderate growth in the global economy is expected in 2015. At today's meeting, the board judged that it was appropriate to hold interest rates steady for the time being. Further easing of the policy may be appropriate over the period ahead in order to foster sustainable growth in demand and inflation consistent with the target. The board will continue to assess the case of such action and at forthcoming meetings, of course. The Australian dollar has declined noticeably against the rising US dollar over the past year, though less so against a basket of currencies. Further depreciation seems likely, particularly given the significant declines in key commodity prices. A lower exchange rate is likely to be needed to achieve a balanced growth in the Australian economy. Nothing new. Moving along to the commodity sector, starting with the S&P 500 index, which had a range of 35 points, close to 2,070 points as we speak. Gold had a range of $11 per troy ounce, trading at $12.14 as we speak. Silver had a range of 40 cents at $16, almost $17 per troy ounce now. The WTI crude oil had $2.40 range yesterday at 51.80 as we speak. Natural gas is trading at $2.62 at the moment, ranging of 0.06 cents, and it's going sideways for the day so far. That was all from me for today. Thank you very much for your attention. Cheers, and I wish you a successful trading day.